What's up, traders? This is Vee Trades, and today we'll be doing a technical analysis breakdown for Tesla with the ticker symbol TSLA. I will first be going over what I see on the daily chart and finish the video off with the weekly chart. So I only look at the chart on this channel because the chart is my reality and it keeps my emotions in check. So I only look at the chart. So let's see what it's telling me. It looks like we're getting a short-term bounce. Why? Because price was definitely overextended. Look how far the average price is, the EMA, exponential moving average, right at 215. And currently we're trading at 191, so we're definitely stretched from that moving average. Price likes to pull back to it, just like right over here. It's a rubber band effect. So that's one reason why we are pulling back. There's also a gap right here created by the earnings report. They weren't able to break through this 197 level probably during the market. So then pre-market, they're like, okay, let me gap the price down, jump that level, and then they can move the price where they want. So again, low liquidity. Price can move around where they wish. So again, they gap the price and there's a big gap that can be filled. We are stretched from that EMA. And again, this was a breakout. So a lot of times price likes to pull back to breakout levels. Looks like we could probably move this line a little bit higher right here. This looks like the key level. Key level is at 206. That's where price has been bouncing from and finding resistance several times. So it looks like we're coming right back up to that key level, and that coincides with the gap fill and the EMA catching up. So there's three reasons why price should be moving up higher from right here. Who would know exactly when? No one knows exactly when, but when you start seeing green bars after overextension, there's a good chance that it'll come back to that level. So I'll be expecting higher prices, at least in the short term, probably 206, 207, because of those three reasons. But again, this is still a downtrend, meaning that, just like how we have an uptrend and price pulls back, there's a good chance it will continue. Well, this is a pullback in a downtrend. So there's a good chance, even though the price is moving up higher in the short term, there's a good chance it will still go lower. So my target in the, further distance or the near term after this correction is over to the upside, I'm looking for the 160. That's the measure move target. This is one leg down in the past. This is the start of the second leg, right back over here in December. And you can see it's targeting the 160. So that's the level that the bears are trying to reach. And it looks like they may be able to reach it after this pullback is over. We could always just roll over from right now and continue lower, but that's looking unlikely, especially how far we are from the EMA, and we already do see bullish momentum to the upside. So there's a good chance this will continue. I'm expecting the 207, 208, good chance of finding resistance for further downside. Is it guaranteed to find resistance there? No, it's not, but that's the expectation because this is the target that the bears are trying to reach. Let's say we do see a rally, very strong, then things change. This may be leading towards a reversal to the upside, depending on what we do around this level and how strong we get there. So that's what I see for Tesla: short-term bearish, medium-term, short-term bullish, medium-term bearish. Long-term, probably bullish because it's Tesla. Good chance that it will continue moving up higher. It will probably reset all-time high eventually. It's not guaranteed, but there's a good chance for that. Stocks generally move up and to the right over time. So let's take a look at Tesla on the weekly chart. And, this thing has been a thorn on the side of Tesla, this downtrend line. You can see that it drew it off the first three swing highs right over here on the weekly chart. And if you drag that down, it coincides with these three swing lows right over here. These swing highs over here. So we have 6 touches basically on this line. So it's not going to be a bull market until we can break this trend line. So, price, it could do it. But again, it would need to break this trend line a good amount, hold as support, and then we could probably see a rally. Because now, you don't have a lot of resistance in the way. You do have some resistances such as horizontal levels, but this trend line has been definitely an obvious level. And if it's obvious to me, it's obvious to someone else, and it's obvious to multiple people. So a lot of people are probably looking at this downtrend line, and they're waiting for a break, to be buying, with the move up higher. But again, we'll see what happens. Just because we break it doesn't mean we're automatically going to move up higher. It depends on what type of reaction we get. Sometimes it'll be a failed breakout, and we can just collapse back down. But if we do break it, that'll be the first step for higher prices. If we don't even break it, then you can't even expect long-term higher prices. So the first step would be breaking that downward trend line, and then we'll see what type of pullback we get and if that bullish momentum can continue. But that's a long ways away. In the short term, pulling back, it's overextended, looking for the low 200s. Good chance it'll probably continue lower towards that 160 level. If it doesn't find support there, then I'll be looking for the 106. But that's where that low point was back here in January of 2023. So that's how I'm looking at Tesla. This is Vee Trades, so thank you for your time.